Yes, we can hear you.
All right, good. That's a good thing. All right. Let me pull up the chat real quick. So how's everybody doing today? It was one crazy day today. We can use the chat too to answer, so make it less confusing. Okay, so how many members finished green today? Doing good? What do what does that mean? You did good today, or are you doing good personally? Judy. Okay, good, good. All right. So do you guys start using the brackets at all? How many of you are brand new into the VIP, the VIP channel? Welcome. Okay, so today, once a week I like to do a Q&As, guys, for the new people, for members that are still struggling with the system. And I'm here to answer your questions and pretty much guide you and help you set up your TOS if you need help. So I'll start off with some questions. If you guys have any. Also, an update on the course. I think Doreen should be putting that out like shortly, like hopefully this week. So anybody any questions for me? Talk a little bit about scaling into contracts, how you start with small size, then max out. Okay, so my scaling in method, guys, I usually do it when I see a big move. Okay, could be a big move to the upside, could be a big move to the downside. All right. And going in with 100% of your position is not ideal. All right. Only because you're not leaving yourself enough room to build the right size in the trade, right? So, and that will make you more effective also, okay, without getting stopped out. Yeah, so do you guys want to know how you scale in using the brackets? D? Is that what you wanted to know? Also, another thing that you guys have to know as a trader, you have to have a defined risk, right? And what I mean about defined risk is before you take any trade, you have to know how much you're willing to risk within a trade. Okay, that you have to know. Okay, when I say 100% of my position, so for example, if I have $10,000 and 100% of my one position is $1,000, okay, I will use that $1,000 and I will scale in slowly until I get 100% of my full position. Yeah, so that's what I mean. So if I have $10,000 and my defined risk is $1,000 per trade, that will be my 100% position, $1,000. But am I going to go in with $1,000 in one shot? No. I'll probably start scaling in slowly. So I'll probably start with 200, then I start adding another 100, another 100, another 100 until I have $1,000. Okay. All right. So also for small accounts, the scaling in method will not work. All right. Especially if you have 2,000 or 1,000. Okay. Usually with smaller accounts that size, I will prefer you guys just aiming for your entries and having a perfect entry pretty much, right? Also, being that you're new to my system, you still don't know really where to get in, right? But after I start doing the courses, and if you do take my course, I will explain how to position yourself the right way. All right. Yeah, no problem. What was the other question? Can we use OCO brackets on the phone? Okay, so on the phone app, there is a way to use the advanced orders. Okay. But the only problem is, guys, you cannot trail your stop loss like you do it on TOS desktop, right? So you're not going to be able to manually move or trail the stop loss. So I wouldn't recommend day trading on the phone, only because for that reason. And two, you can't keep your eyes on the charts. Okay. The only way you can use your phone if you have a chart in front of you. Okay. I've seen, I have done it before, use a laptop for charting, and then I use my phone to execute my orders. But if I don't have a chart in front of me, I wouldn't get in because I'll be scared to get in because I don't know what's going on. Okay. And also to be effective with your trade, you need to trail your stop loss. It's like one of the most important steps to trading, guys. All right, because there's times where a scalp trade can last minutes, even seconds sometimes, right? So you need to be very effective with trailing your stop above break even or at least at break even. Okay. Did you guys see the PDF I posted last night? I give you guys like a little breakdown, a brief breakdown on my trading styles. Somebody was asking where should they set the stop loss. Okay, so if you guys saw the PDF last night, I did post it on the channel. Did you guys see it? I wrote about it. Okay. Did you guys read everything? Because I talk about positioning your stop loss. All right, so yeah, make sure that you actually read it all because I talk about how to position your stop loss and when to position with 30% and when to position with 10%. Also knowing your risk to reward ratio before you take a trade. Okay. Knowing your risk to reward ratio is very important. All right. What do you mean always delta between? Okay, so the delta is the is the Greek that I follow on the option chain, okay, to pick the best contracts to scalp with. Okay, so the delta is one of the Greeks that I follow. So a short explanation of the delta, okay. So if a delta of a contract is 50, the delta is 50, and I picked that one contract, all right, to scalp with. If SPY goes up $1, I get $50. Okay, so that amounts to every dollar that SPY goes up. So if I get the one contract with the delta of 50 and the scalp trade goes up $3, I make $150 in profits with one contract. If you pick a higher one, obviously the premium is going to be higher, right? So it's going to be more expensive, but you make a lot more. Okay, hold on one second, guys. Let me pull up my charts. So all these things that I'm talking about, I cover in the course. So hold on one second. Can you guys hear me? Hold on 1 second, guys. I'm having too many Zoom meetings today. Hold on 1 second, guys. All right. All right. Can you guys see it? You guys see the screen? All right. Yeah, I don't know what happened. Froze for a quick second. All right. So where we left off, it was okay. You guys can see the screen, right? Everything's cool, clear.
Yes.
All right, cool. All right, so the delta, right? So this is one of the things that I cover in the course. I give you a full class on the Greeks, all right? And you need to understand these Greeks to better know what you're trading, right? So we're trading options. So each Greek has a purpose, right? So obviously the one that you want to keep your eyes on is the time decay, right? Theta, and then the delta when you scalp. So the ones that I use is that when I scalp, right? So the ones that I use when I scalp is the same day expiration, okay? Because obviously we're not looking to hold too long, all right? So and plus, you know, with the volatility, we'll probably make a lot more too, all right? Because we play in the range breakouts, okay? So the goal is to get in and out, right? Day trades, in the other hand, those are further out expiration, like a couple days away, only because we are holding longer. Okay. And I explained that in the PDF that I posted on the channel. All right. So the delta is right on the option chain, guys. So this is the option chain with my setup. Okay. Pull out my tools. I'll show you. All right. So this is the call side and this is the put side. All right. So the delta, it's right here, guys. All right. Right here. So the calls will have a positive delta and the puts will have a negative delta. Okay. And the ones that I keep my eyes on are always in the money or at the money. Okay. When scalping. All right. So the deltas that I'm looking at is between 50 and 80. So this is the group that I'm looking at. All right. And for puts, the other hand is right here. When drawing SNR in the width of the rectangle equals to a certain wick. Now, the box really, it's just a preference, guys. It's not necessary. I just use it, you know, for a point of reference on my charts. But all you have to do is really draw out your demand and supply zone and just and make sure that you apply the correct name on it. All right. So the delta, guys, it's right here on the option chain. Okay. So obviously, the lower the delta, the cheaper the premium. Okay. So I always say stick to quality, right? So the higher the premium, guys, higher the quality, but the more expensive it is. Okay. I'd rather buy 2 contracts with a delta on this level, right? Than buying 20 contracts with a low delta like this, right? That you pay a couple bucks. But is it worth it? No, because you'll probably make a lot less too in profits. And you will make a lot less. Okay. And plus, you see the difference here? With a delta of 1 or 3. So if spike goes up $1, you're only making $3. Yeah, you are spending a lot less, but is it worth it? No. I'd rather get 2 contracts with a higher delta, right? Then scalp the range, get in and out, and make quick profits. Is that clear? Obviously, there's more to it, guys. I don't have enough time to cover every single detail, but that's the, you know, that's what I look for on the delta. Can we please start a new challenge for someone, very small account, say $300 when I take your first trade? It's usually a scalp and I'm out. Okay, so yeah, that's what I'm saying. So stick to day trades, Mimsy. Day trades are definitely higher returns, but you have to understand that you have to hold longer and definitely can't panic sell. Do you understand the difference between scalping, day trading, swing trading? No problem, Giselle. Okay, so day trading for you will be the best thing right now because you want to make the most that you can with $300, right? And I've seen a couple of my students do it with $100. It's possible, you could do it, but you have to stick to day trades. All right. So for example, if you stick to a day trade, right, and you get in right here with a, I don't know, let me see. You have $300, we get in with a 56 delta one, right? Or actually, you know what, let me make it clear for you. Because when you day trade, you're not going to do the same day expiration. So we'll do the 18. Okay. Also, on day trades, the delta could be between 30 and 80. Okay. It doesn't have to be between 50 and 80. Only when you scalp trade. All right. So we pick the one with 42, right? And you get in, we get in the support level. Okay. Then we wait for target right here. 446. So from 436 to 446, that's $10. So you do $42 times $10, times 10, sorry. So you do 42 times 10. How much is that? With one contract. Anybody know? You should know quick. Yeah. Yeah. $420. Yeah. One contract. Correct. All right. Yeah. Okay. That's the way you do it. Obviously, the higher the premium, okay, the less time decay effect. Okay, and that's why they're more expensive, guys. The more expensive we get, okay, that's the reason. The lower they get, the time decay will eat you. So you'll make a lot less money than you're actually making money. So when it's a day trade, how do we know how long to hold? Do you alert it? Okay, so day trades, usually we open at an important key level, and then we sold our next key level. So if we want calls, we'll probably open at the bounce of support and we sell at the rejection of resistance. For small accounts, when will you panic sell? I don't panic sell. What do you mean panic sell? The delta for day trades between 30 and 80 and two days away. Yeah, sure. I did this in the other class too, if you missed the video. Please explain scalping and trailing if you have time. Okay, so scalping, guys, we're playing the breakout of okay, so with the 3-step strategy that I have, and I'm trying to make it as easy as possible for you guys. We're scalping, yeah, so we're scalping the each continuation step. Okay, so on a trend, we get this retracements. Okay, we get these continuation patterns. And out of every single continuation pattern, we play the breakout, and that's the scalp play. Okay, usually on a trend intraday, we get 3 scalp trades per each side, on the upside and the downside. Okay, so for example, if I'm make a super example. So on the 5 minutes, okay, this is the this is the 3-minute chart, okay. So if we get in on a reversal pattern, okay, So the reversal pattern here is this double bottom on the support. Okay, my entry will be on the double bottom, okay, for a scalp play. And then once it goes up, I trail my stop loss. Okay, starts going up. I trail my stop loss will be right here when I enter. I wait for the price to go my way, and then I trail my stop loss above break even first, and then I keep trailing up until I get stopped out with profits. Okay. Now, if you miss the reversal pattern, okay, you play the continuation pattern. Okay, and all these patterns you have to know to be able to scalp trade. Okay, charting is important when scalping, guys. All right. Obviously, you guys have me, so I give you the alert. But if you really want to get into scalping, you have to know your charts. So important. And I give you guys the right lessons in the course. So hopefully Doreen puts out the service soon so we could start educating everyone. Did that make sense, guys, or no? Sometimes when you move the bracket cells, how do we care for that? Okay, so it's very important, guys, that when you in a trade, okay, you keep your eyes on your entry, okay, the price that you got in, okay, and then always make sure that you stay 10 points away from the bid. Okay, and I'm gonna show you exactly how to do that. All right. So let's reset here. So let me close this up. All right. Let's do a quick example here. All right. All right, so we're looking at the 3 minutes. Actually, let's do the 5-minute chart. Okay. Let's pick some contracts out. Delete this. All right. So let's pick watch this. I'll pick two calls and 2 puts. Okay, also, before you start the day, guys, you have to pick your contracts and put them in the watch list, right? So you don't waste any time, okay? And the only thing you have to do is keep your eyes on the chart and then select the right contract that you want to trade. That's it. Make it simple on yourself, okay? Simplifying your work process will make things a lot easier for you. All right, so the way you do it in the morning before, you follow my watch list, right? You see the key levels. You put the right key levels, all right, on the chart. Then you pick 3 contracts, 4 contracts each, 4 calls, 4 puts. So like this, once the day starts, all you have to do is worry about the charts. And once you're ready to trade, you pick the contract and I'll show you exactly what to do. All right, you should have everything linked together so you're not wasting any time. All right. All right, so we have, so let's make this example. We have 2 calls and then let's pick two puts. All right. Okay, also, question. You guys have any knowledge on charts, like chart patterns, reversal patterns, continuation patterns, neutral patterns. What's your knowledge on them? None. Okay. Not really. Okay, so pretty much nobody really has a little bit. Okay, so yeah, that's different, guys. Support and demand, demand and supply zone, those are, you know, the basics, right? So yes, that's important, but if you really want to know about scalping, you have to know your patterns. It's so important. And also understand how to play them correctly and how to use the confirmation to give you confirmation for entry. Okay, so like it's so important. The chain was strike price 445, only went up to 446. So those are the two strike prices I play, Maggie. If you looked at my P&Ls, those are the two that I used. Yeah, guys. So playing the support and resistance levels, that's day trading. So day trading is, okay, so if we see the rejection, okay, if we see the rejection at the supply zone, guys, I'm going to get in with puts. Okay. And my target is the demand zone. Usually these plays could last an hour, could last 3 hours, could last the whole day. So that's why you have to be aware of that. Okay. You have to know what range is. So this is range. This is ranging. This is called ranging. Okay. Then this is called breakout. Okay. And then trending is a lot of key zones together on a bigger time frame, and you can see the trending. So it's going up in one direction. Like right now, for example, we're in a bear market, right? So it's a downtrend. Do your targets prices ever change during the course of the day? Well, if it's ranging, I know my target prices. Like today, for example, our range was between 435 and 446. The what? The pattern are in December 28 educational material. What do you mean, Danny? I'm confused. Do you ever look at stocks? I don't, no, because I trade SPY. Like SPY is what, you know, if SPY doesn't move or is ranging, nothing really moves. Especially the big names that you just mentioned, like Apple, Tesla, Amazon, all of them. There's really no sense in trading every single stock and keeping my eyes on other stocks when SPY is the mother of all the mothers, you know, like it's the main one to look at. What I look at, it's futures. I keep my eyes on futures and the VIX. You guys know about the VIX? Yes, I'll always wait for confirmation, guys. I trade on confirmation. Okay, so the VIX correlates with SPY, but goes the opposite direction. So when SPY goes up, the VIX goes down. And when SPY goes down, the VIX goes up. Yep. Okay, confirmation. Okay, I see them, but in second, guess myself and them. Okay, so if you guys open up PDF that I posted yesterday on my discussion channel, you can see exactly everything that I mean about range, breakout, and trending. Just write VIX on the search button. You can also buy options on it. Yeah, it's a ticker symbol. VIX. Okay, guys, so let me get back to this, all right? Okay, so if I'm looking at the rejection, right? What do you guys think this is right here? What type of reversal pattern that is? It's should be very simple for a lot of you. Probably heard of it. Head and shoulders? No, that's the double top. Yeah, double top. Yeah, double top. So a retracement step, guys, is this. Okay, so what do you guys think this is on a downtrend? Anybody? Rising wedge or bear flag, correct. Yep. So rising wedge is a bearish continuation pattern, okay? So how would I want to play this? So usually when a bear flag happens, okay, we will want to see the move to the downside, the bounce, the retest, okay, and then more continuation to the downside. So once it breaks the pattern and it goes up and retests it, that's my confirmation for entry. Why do I wait for the confirmation? Because sometimes patterns can fake out. So it could be a failed pattern. So it could easily break. And instead of retesting, it'll go higher. Okay, so that's why the retest is so important. Okay, so when you see the breakout to the downside and the retest, you want to see more momentum to follow to the downside. If it doesn't follow, then there's no trade. Well, the three-step process is a long process, validated. It's in the course, it's about 8 hours of lessons on the 3 steps. And that's the last thing that you're going to learn in the course. Because the way the course is designed, I have risk management first. I go over risk to reward ratio, explain that, explain all the fundamentals around risk management, the brackets, where to position your brackets, in like with the right place, scalping, swing trading, range trading, day trading. Okay, so I show you all that in the risk management. Then I have trading psychology. So to me, trading psychology is the most important aspect to trading. Without the right mindset, guys, all right, you can know all the best strategies in the world, but you're not going to be successful. All right. The keys to success, it's in your mind. It's the psychology. And another thing that you have to learn is the market psychology. And you have to become one with the markets to become successful. Yeah, when scalper with patterns, what time frame do you use? So so the way I do it, I specialize on trend. Okay, so I always, I've been doing this for a long time. So the first thing that I do is analyze the bigger time frames. All right, because like the daily, the hourly, okay, I want to know exactly what the overall move is doing. Right, so knowing your market condition is so important. Okay, you have to know if we are going to range or if we're trending or if we're going to break out. Okay, and you have to know which side, if it's bullish or bearish, right? Market sentiment. So that has to be the first thing to your plan. Okay, when you're planning in the morning. Okay, and after you understand the overall direction and the overall condition, then when the market opens, you could use the 5 minutes, the 1 minute, and the 30 minutes to design your trades, pretty much. Okay, and also you have to wait for confirmation. So if you know that the markets are going to range for the day, we're going to day trade, right? But if you know it's going to do breakouts, then we're going to do a lot of scalping. Okay, and also as a trader, you have to know this. Okay, that's if you want to scalp or day trade. Not everyone has have the character to do it. Okay. Some people don't feel like they can be too aggressive with the markets. And sometimes when you scalp trading, you have to be aggressive. And what I mean about aggressive, I don't mean about sizing, but I mean about with your stop losses, with your risk management, right? You have to be more aggressive. And there's times where you don't have to be too aggressive. Okay. So as a trader, you have to understand yourself, right? So with practice, more practice and back test, and you start tracking your results, then you can better understand what kind of trader you are, right? But you have to find yourself in the markets. So you just use support and resistance level on the 5 minutes. I'm curious as to why the 5 minutes. You could draw it out anywhere, my friend. You could draw it out on the 30, on the 1 hour, whatever you feel comfortable with. I draw it out on the 5 minutes, but then it correlates and it just goes on all the other charts. Really doesn't matter what chart you use. Uh, pricing for the course. Well, that's Doreen is going to take care of that. That's it. When you alert trailing, are you just moving? Yes, I'm just moving the stop loss. Okay. So let's do a quick, I think last time I did put, so let's do it something new. Let's do calls. So let's go to a different time. Okay, so the day before. So what futures do you watch? Watch /ES, that's the S&P, and then the NQ. Yeah, I follow NQ. The SPY one is /ES. At what time do you stop using the same expiration? Yeah, so you shouldn't be holding a bag, guys, if you're scalping. That's the thing. So if you're scalp trading and we're playing the same day expiration, you're not supposed to hold that. Understand that. Because time decay is going so much faster the same day expiration. What we're taking advantage of the same day expiration is because we are scalping the breakouts, right? So we only looking to get in and out. So we're trying to make the most and take advantage of the volatility within the premiums. Okay, same day expirations, they move faster and you get the most. So that's why scalping the same day expiration is the best. Also, when range trading, like day trading, all right, the trade might take longer. So is it ideal to trade the same day expiration? No. Okay, because if you hold too long, you might not even make as much because time decay is just eating your premium away. So it's always important to know that. Okay. I know some people like to get cheaper premiums, but not knowing that you're not going to make anything. You're only going to make $15 maybe. You waited 10, 15 minutes, 20 minutes, and you're only making $10 instead of making $60, $70 with one contract. That's why you have to follow the right delta, guys. All right. So I'm going to give you an example on trailing right now. So Gazelle, when are you left holding the bag? Like today, for example, we were playing the 16, the expiration for the 16. So it wasn't the same day expiration. So that's why I held to certain position longer. Okay. Does that make sense, Gazelle? Yeah, try not to hold Fridays, guys. That's even the worst. That's the worst. Today there was no entry for day trade. We did one, yeah, the engulfing candle, the green one. That was the day trade. Because we held longer. Mimsy. Remember when I put that picture of the house and the candle just ripping through it? The inside bar, yeah, the two inside bar and the engulfing candle, yeah, on the 4 hours. Yeah. So I actually I did the scaling position on that one. until I had 100% position. Then I waited for the inside bar to terminate, and then the engulfing candle came in and just started roaring all the way to the top. Yeah, so we were playing the continuation pattern on the 4 hours. That was a falling wedge pattern, and that's a bullish continuation pattern on the 4 hours. The breakout was the engulfing candle out of the pattern. So the inside bars is okay. So if we get a breakout candle, right, Teresa, we're gonna get a continuation pattern. So on the with the candles, we'll get 2 red candles going down. That's 2 inside bars, right? And then the one after is the engulfing one that takes off, that start breaking out, and that's what happened. So what I mean about 100% position. Okay, so I think I said that before. So you have to have a defined risk. Okay, and what I mean about that is like if you have $10,000 and you want to take a trade, what am I going to risk on a trade? So I'll say $1,000 would be my 100% position. Okay, so out of that 100% position, the $1,000, I start with 200, and then slowly I build my position. Okay, until I get $1,000 full position, 100%, and then I wait for the trade to take off, do what it has to do. Then all I have to do next is just trail my stop loss above break even. So now the goal is to move the stop loss above the break even point. So now my trade is not in a reward to risk scenario, but a reward to reward scenario. Makes sense? Okay. Also, the inside bars and the candle patterns, guys, that's tier 2. That's more advanced. So once we do terminate the tier 1 for whoever does it, tier 2 will be next. That's more advanced, advanced trading. All right. Okay. All right. So let's do some okay, so I'm just gonna do a quick example here, guys. All right. I mean, after I show you how to trail real quick, then I could go on the today's chart and I can show you. Have you ever had a situation where you have a stop loss bracket set, but it doesn't sell when it hits it? No, never. Are you talking about in paper trading? Maybe in paper trading, but I haven't paper traded in years, so I don't know. New to VIP, do you have any videos on where to start, like to need to learn how to set up? Yeah, I do have. Yep. I have that. I posted on the discussion. No problem. Okay, so after we identify our levels, okay, so let's pick our calls real quick. So we have 2 already. So being that we have a watch list on the side, and with the tutorial videos, I show you how to set up a watch list. I show you how to put the contracts on the watch list, so you don't have to waste no time during the day. So all you have to do is just click here, and boom, you have your option chart ready. Okay. All right. So let's just real quick. All right. Okay. So one thing that you have to keep your eyes on when you get into a trade is your entry position, right? And usually your entry position will be right here on this tab. So your contracts will appear here and your entry position, right? Based on your entry position, this is what you have to keep your eyes on, right? So this is the contracts pricing, right? So if we get in at, I don't know, 237, for example, So that's your break even point. You have to set your stop loss right under, and you have to keep your eyes on this. Also, if we're using the 285.5, this is what you have to keep your eyes on, the bid and the ask. So the bid is what you have to stay away from, right? Because if you chill too close to the bid, there's a good chance you might get filled right away, all right? So it's very important that you stay at least 10 points away from the bid. Okay. So let's press play real quick. All right. All right, being that, let me pause real quick. At the open, okay, we get 3 retracements already intraday. Okay, so right from the top. So we get 3 retracement and we get a lift off, a higher low. Also, I go over my indicators in the course and I talk about my moving averages and how to read them correctly on the chart and understanding when a price is bearish, and I'll give you a quick rundown. When a price is bearish, the price action, the moving averages act like resistance, okay? And when they're ready to cross over, it's called the golden cross, okay? Now it becomes bullish, okay? But there's more to it. Obviously, I'm just briefing it up, but everything has a purpose in the course, guys, all right? So that's why it's very important. If you really want to learn, the course will do it. Do you trail starter point position? Should they be in profit or do you wait 100? No. I don't wait no 100%. Sorry, not at all. Especially when scalp trading, you want to be as safe as possible. And the first thing you should do though is moving your stop loss to break even, because now that you're in a trade, anything can happen, right? So you always have to be on the safe side. So the break even point is key, right? You never want to leave it 10, 20% under, because then if it does reverse, now you're there holding. And I know a lot of people will now respect the brackets and they keep pushing the stop loss under and more down, thinking, okay, the markets might turn around and now you're messed up. Okay. I know a lot of people still do that. Okay. So don't do that. All right. That's bad habits. You have to build a routine of good habits. All right. And obviously I go over with the trading psychology class. I go over all these things. Okay. It's all psychological. You laugh because you know it's you. It's funny. Uh, you know why I say this, right, guys? Because in the beginning, I used to do it, right? So I know how it is. All right. I know exactly the way we think when we're trading. All right. So don't do that, right? We always respect your stop loss, and the good thing about the stop loss, you're getting stopped out with a minimal loss, and you're gonna have a second opportunity to trade again and to make up for it, instead of just staying into a losing trade, and then you're stuck averaging down until there's no more money left in your account. And now what? Okay, so there's a time where you have to scale in. That's different than averaging down. Averaging down is when you're going against the trend and you don't want to accept the loss. Okay, so that's a psychological issue that you have to fix. All right, and I've done it many times in the beginning days. I used to do it all the time, and that's why I lost so much money in the beginning. All right, it's because I was doing all the wrong things. Okay. Yeah, the averaging down is no bueno. Okay. So there's a difference between scaling in position and scaling out of position. And then there's another thing called averaging down, no averaging down. Okay. Yeah. Okay. So it's very important that you don't average down, because all you're doing is adding more risk to your portfolio. And now you're even risking to lose it all. All right. And we're trading options here. There's time decay on it. And sometimes we're trading the same day expirations. So you might end up the end of the day with no more money left if you average it down and maxed out. Oh, it's a big difference. Usually when we averaging down, when we first start trading and we averaging down, we don't realize how much money we actually put in. There's no defined risk. At that point, you have no defined risk at all whatsoever. When you're scaling in, you know how much 100% position is, and you're not going in with 100% position right away. You're adding slowly. Yeah, if you have no more money left, that's it. You can close your account and say, all right, I'm done. You do limit buys while they're using the brackets. Limit buys 8 out of 10 times do not get filled. You know why? Because we always want the best price to get filled, right? So we're trying to look for the best price as possible. Guess what? You're not having it. I do market orders. All right. So let's do it real quick. All right. So the contracts to the left. All right. I'll show you real quick at the trail. So we have the 285.5. We can press play. I'll put the template on. Okay. Also, guys, sorry, mention this. If I'm halfway up, right, from the demand zone, instead of having, okay, so if I want to buy calls, this is very important. If I want to buy calls on from the support zone, now I know that if I buy calls here, there's a higher chance of reward than risk. So I usually go in with 30% stop loss here. The more I go up, all right, to the first retracement step, for example, now the risk now gets higher and the reward lessens. Okay. So now when you scalp in there, the risk has to be tighter. Okay. So instead of 30%, 20, 10%, you have to pick. Okay. And the higher it goes, calls get riskier. That's when the stop loss has to be tighter. Okay. That's when you scalp trading. All right. If you're day trading and we're getting in a demand zone now, you can keep it at 30%. And then once you see it moving, then now you can move it to break even or a little bit above break even. So like this, you can position your trade in a reward scenario instead of risk to reward. Okay. Does it make sense, guys? Is the course recorded? Well, I have the e-course. That's for people that work and they cannot attend live classes. I have the e-course, but the e-course come with private classes by me. So you get one-on-ones with me. And the group course, that's different. That's 3 times a week, 2 hours a day, and it's set hours. 2 hours a day, you know. So probably will be Tuesdays, Thursdays, and Saturdays, 2 hours each. How you to get the strike price on the right side every time I open my TOS? I get confused. I can't figure out where to start. Oh, okay. So let me do this real quick. So I have to follow this real quick. Yeah, even in class, most likely, yeah. After 4, after 4. Okay, usually, I don't know, it probably is gonna be from 5 to 7. I'm Eastern time, guys. I'm in New York, New Jersey. Later, please. Okay, guys. So let me get to this. All right. So you guys understand how to position your stop loss and the percentage that you have to use based on where we at on the chart. Does that make sense? Yes, no? Okay. All right. So boom, let's start the day. So I'm seeing a inverse head and shoulders. So inverse head and shoulders is the opposite of the head and shoulders. So that's a bullish reversal pattern. So it's right here. Okay. Okay. So I like it. I like this. So what I do is I pick 20%. Okay, I have my defined risk. Okay, I'll wait real quick. If I follow the 30 minutes, it looks primed to rip. Okay, looking where we came from, we see 3 retracements, 3 days, and we see a higher low formation. Okay, so this is the bottom and this is the higher low formation. That looks very bullish to me. Okay. So let's wait 2 seconds. This is an example anyway, guys. All right. Just want to show you how to trail. Okay, so the one that we picked right now, the bid is at 244 and the ask is at 248. Why I love SPY, guys, is because the spread between the bid and the ask is not too big. It's perfect. So when you go a market order, you won't get a crazy fill. Understand? That's why I love SPY. That's another reason. If you trade a stock, right, that has low volume in the option chain, then there's a good chance that the spread between the ask and the bid is just crazy. And sometimes when you enter, you might be already down $100 or $200. You know what I mean? Depending the stock that you're playing. Jersey in. Yep, Jersey. Okay, so based on what I'm seeing, so let's go right here. So this is a expanded triangle. So it's a bullish continuation pattern. Let's see if it will actually pan out. Also, everything that you see on the chart, I use it and it has its purpose. The 9 and the 20 have their purpose, EMA. The 30-minute chart has the 50, 100, and 200 SMA has a purpose. The RSI has a purpose. I always look for something within my indicators to give me more indication of a correct play. All right. And also knowing my chart patterns as well. Okay. So boom. So it's respecting the pattern. I like it. Yeah. Then we end with the brackets. All right. Goes bouncing off the 9 and the 20. There's also a golden cross. The golden cross is the cross between the 9 and the 20. That's creating a bullish breakout. Okay, and the death cross is when the 9 and the 20 are crossing the other way, going down. So when the price is bullish, the 9 and the 20 act like support. So you will see the price action bouncing off of it and just trending up. Then when it's ready to reverse going down, you will see it crossing the opposite way, creating a death cross, right? And then now the 9 and the 20 EMA will act like resistance. You buy market, all the way market, okay? So our entry price is 235. The bid is at 263. So now I can move my stop loss to, let's move it to like 227. Can move it above 240. Okay, so now we above break even by 5 points. Yeah. You can move a little tighter. 242. Okay. All right. So now we above break even, guys. So now we can't lose. Okay, so even if the price, you can leave the price the way it is, right? The brackets the way it is, and leave and let SPY work itself. All right, just give it some room to breathe. Now, if you're trailing too tight and you're not keeping your eyes on the bid, you might get filled like that. Okay, so it's very important that you keep your eyes on the bid. Also, you guys see what it's doing right now? It's creating a retest. Okay, so let's see real quick. Also, the pattern is right here. So you see where it's bouncing at, guys? The right here. Yeah, right there. So where the body of the candle is, you connect it to the other body of the candle. So the highs. Okay, so this is a bullish pattern. Yeah. But because we are already above break even, we can't lose. Even if we do get stopped out, doesn't matter. No, because we still come out with profits. You only use the 9, the 20 indicators. Yeah, intraday on the 5, the 3-minute, 1-minute, I use the 9 and 20 EMA. Those are the only two that I use intraday. Then on the 30 minutes, hourly, daily, I use the 50, 100, 200 SMA. There's a reason why I use the SMA on the bigger time frames and the EMA on the smaller time frame. The EMA, there's less lag and is more accurate with the current price. And the SMA has more lag, so it wouldn't work that effectively. All right, that efficient. How to go back to check what bracket you used? What? What do you mean? What do you mean? How to go back? So the percentage, so you have 10%, 20%, 30%. Right? Based on the risk to reward ratio within the setup, if there's more reward, now I wouldn't put a tight stop loss there because there's more reward if I play there. Now, the tighter it gets, right, and the riskier it gets, now the tighter I play my stop loss. What do you mean, right here? On the option chain, Liz? The bracket chart, like right here? The option chart? I'm confused. Right here, you mean? On the equity chart?
Sorry.
Yeah.
Let me see. So you know where you have your brackets?
Right here?
Yeah, if you go up a little bit more, do you see that number 2.54?
Yeah, that's the bid and the ask.
The 2.54.
This one right here on the
No, on
top.
the other side.
Oh,
Just,
that's
yeah.
the price, the current price of the option.
Oh, okay, right. Yeah,
Yeah, yeah.
okay. Thank you.
No problem. Okay, so failed the pattern. Okay, being that we are above our break-even point at 235, it's at 253 right now. Okay, so all we care about if it's going to trigger that the stop loss on our option. Okay. Also, on demand will be a little laggy sometimes, so don't pay no mind to it. The only thing that you have to use on demand for, guys, is to really work on your trailing your stop, your entries, your exits, spotting patterns. So that's what you have to use on demand for. Don't use it to make the most profits, because that shouldn't be the why you're using the simulator. The simulator is there to perfect your charting, your entries, your exits, you're trailing your stop loss. That's what you have to use the simulator for. Also, when you start to trade in the beginning, don't focus on the P&L. That will be your downfall, right? If you have the mindset of, okay, I have to make $100 today, well, guess what? You're going to lose $100, right? Is it possible to have a screen without the options for those with small screens? That's the problem, guys. If you have a small screen, it'll be very hard for you to trail. And you need all the charts open to really understand what's going on if you want to be effective. If you have a small screen, try to connect an extra screen, a bigger screen, so you can have all the screens. What do you mean a lag? No, we stopped out. We was in profits. It was 5 points above our break even. How did you set the stop and limit on the chart? What do you mean how I set it up? How I triggered it right here in the template. Are you new, Rosaline? Because I did this in the last class. I'm gonna post all of the videos to set up the TOS with the brackets and all that. I'm gonna post it on the channel so you guys can review every single video and test it out. All right. How do you set up all the charts on the screen? The same way I said it. I have a template link. Okay. On the channel, in the channel, I'm gonna post the educational tutorials, and there's a link at the bottom where you can import it into your TOS. So you highlight that link, you go to your setup, you go to open shared items, then you paste the link here, press preview, and then import. And then all you have to do is go back to setup, and it should be right here, the link. Then you click on it, and it should pop up everything you see here, the way it is. Those of us who are new or lost, those videos will be helpful once you post them for beginners. Yeah, also, Lydia, if you're a beginner, I will recommend not using real money yet, only because logically, it will make no sense for you to trade real money. So use the simulator, paper trade, and use it to understand the system, how to understand support and resistance, how to understand trend, how to understand range, how to understand breakouts, how to understand retracements. Like all these things are important that you have to slowly understand. Plus, you're not trading equities here. All right. Equity is much easier. This is options. Okay. So you have to understand that trading options is more riskier, but there's more reward to it. Okay. That's what you should know about options. That's why my system is designed to keep you safe and at the same time keep you profitable. Right. Please, can you go over closing swings? Sometimes you don't sell out open. What, the overnight swings? So the key point of the overnight swings, we open at the end of the day, the following day, and then depending where we at, okay, and I see that we can go, that we can still make a bigger move, I will hold, right? But if I see that it's not going to do anything really, it's gonna go the opposite way, for example, I would just cut and then I just day trade or a scalp. But you're not gonna find me holding on to losers too long, guys. I'm not that guy. If I think it's not going to go my way, I'm just not going to hold at all. I'd rather just cut the loss, small loss, instead of being bigger, right? And also, being that when I open a swing position, I have a defined risk. So whatever I'm willing to risk on the overnight swing, I'm willing to lose. Okay. Also, another thing, if you're going to swing trade, then day trade, then scalp trade, and you're learning, that's not a good way to learn. Good way to learn is to pick one style, stick to it, master it, and then take it step by step and focus on one stop. Don't focus on overnight swings. Don't worry about scalping. Don't worry. Like you're trying to do everything in one shot. It's too much. All right. You're gonna overwhelm yourself. So take it step by step. Pick a style that better fits you, right? If you want to scalp, stick to scalping. If you want to day trade, stick to day trading. But my recommendation for everyone, I will rather do day trades, right? Stick to day trades for now. The scalping, you need to have at least a higher level of charting, like chart patterns, breakouts. You need to know the confirmations, how to read them. All right. So does this make sense, guys? See, that was a perfect example of a fake breakout. You guys saw that? So you can easily start playing here thinking that it's going to break out to the upside. Then if you don't move your stop loss, or if you don't have no stop loss, right, you would have got in and then you probably would have stayed in still. Okay. And that's not good. So the brackets is there to save you. You see how it saved me, but I still came out with money. I still came out with profits. That's the way you have to do it. That was a perfect example right there, guys. Right? You guys saw that, right? Because I bet all my money that if you don't have no type of stop loss or a routine, you will probably would have held here, and now you're averaging down, and now you're averaging down more because you're thinking, okay, it's gonna go back up, it's gonna go back up, and now you're adding more risk. Right? Is it ideal? Is it logical? Is it good? Like, no, it's not a good thing to do. All right. So the bracket was there, and I still came out with profits, even though I got stopped out. Because I was able to be ahead of the game. Instead of waiting at negative 20%, I moved it to 5 points above. So now I still come out with some profits. Okay, so the brackets is like the most important thing for you guys. All right, and it was for me too, because when I started like trading again after my first year, I took like 12 months off, from trading after my first year. I lost a lot of money. And what I did for months and months, I was back testing and testing and training with the simulators, right? And then I designed the system, the brackets and everything that kept me profitable. And that kept my risk very minimal, like my losses very small. And I was able to maximize my profits with it. Okay. All right. So I hope I answer all the questions today. I will post this video also. What else? All right, guys. I will post. What if you buy without the brackets? How can you add the bracket? Okay. So let's make an example. If I buy here and I forget to put the bracket, I put the active trader on. Right. So this is the active trader. So I forgot the bracket. So my filling point is at 217. So you see when I'm scrolling up, this gray line on the option chart is moving. So I'm at 208 right now. So my filling point is at 217. So I'll probably move it down and I add one there. It's at 224, 218. So I put one right there. Okay. Change it to 2. Press save and boom. Now I have a stop loss. Okay, guys, I'm going to show you how to trade right now. All right. So I have a stop loss set at 195, entry point 217. The price is at 221. So we already made one step down. So this is one step down, two step down, So this is the lower high confirmation going down. So let's see what's going to happen here. This is probably a retracement as well. Let's see what's going to happen here. All right, so being that it's moving already, right? All I want to do is trail my stop loss now. So the bid is at 217. I keep it at 208. So boom. So now I'm 10 points away. Okay, so now it's moving. It's at bid is at 217. I'm at 208. So now I move again. 236. So I move it to 220, 223. So now I'm above break-even point. My break-even point is 217. My stop loss is at 224. The price of the actual contract right now, the bid is at 236. Now, if you want to be a little tighter, put it at 228. Okay, so now you're 10 points ahead. I explained that already. I said it like 10 times. So if I'm getting in at a level, right, at demand zone with my calls, and I know that there, when I'm looking at the charts, the reward is much greater than my risk, then I have a wider stop loss there. The higher it goes, now the more risk there's going to be. So there I play a tighter stop loss. So when you know the risk to reward ratio within your setup, you're going to better understand how to position your stop loss and the percentage to use. If you don't know by looking at the chart that there in that setup, there's more reward than risk, then you shouldn't be trading yet at all. You need to understand this to be effective. Risk to reward ratio is so important to trading, guys. You need to know your risk and you need to know your reward. Like you need to know these things. What do you mean? I just explained what break even is. Teresa. Oh, geez. Okay, guys. You guys all need a full master course to the T here. Like everyone needs like kindergarten trading. I need to explain everything in the course, guys. Oh man. I suggest highly, guys, to take the course, please. All right. Please. This is the reason why we lock the room so people don't come in late and you have to keep repeating yourself. Yeah, no, I should lock the room after a point. All right. Yes, so it's very important, guys, that you understand, all right? It's all right, guys. I mean, listen, I'm here for this reason, right? To show you and teach you. So obviously, I'm not going to be able to teach you in 1 hour class. This is something that you guys need at least 4 weeks of intense education, like 3 times a week, 2 hours a day. Like you guys need that. A lot of you don't even know, uh, like basic stuff, and it's not good if you don't know these things. Okay. So it's important. Okay. So like break even, it's important because you don't want to have your stop loss under your break-even point, because then if you do get stopped out, you lose money. So the goal is to move it to break even and then above break even, the stop loss. So being that it's moving now up, right, guys? And the bid is at 248 and my break-even point is at 217. My stop loss is at 227. So I keep trailing. So now I'm close to the bid. So I'm at 243. So now I can't lose. So now if it does drop, I'll come out with profits. That's the key to trading. All right. You know, when they say keep your losses small and your wins bigger? Well, there you go. No, I started doing that. What do you mean? D. Yeah, I just told you, Pete. I feel like I'm repeating myself like crazy. You have to stay away from the bid. Okay. So if the bid is at 261 right now on the contract that I picked, right? 266 now, and I'm trailing too close to the bid, I'm gonna get filled right away. So you have to stay 10 to 20 points away from the bid so that this you can give enough space for the price to do its thing, and then you could trail it above. All right, guys. Yeah, I mean, all right, guys. I will post the replay on the channel so you can watch it. Okay. So boom is moving. The bid is at 266. I'll make it simple. Now I'll move it to 261. Okay. So now I'm 4 points away from the bid. So now I'm trailing tighter because now I have enough profits, pretty content. So I'm just gonna keep trailing up until I secure. Okay. The bid is at 264. My trailing stop is at 261. No problem. Okay, so you keep trailing higher, the higher it goes, guys. So 262. So on the side here is where you see where you're moving a stop loss to, okay? And you gotta follow the bid, guys. The higher it goes your way, all right, it's going your way, the trade, the tighter you trail it. All right. So now the bid is at 267. I'm at 261. So let's trail it closer. So now I'm at 265 on the contract. The bid is at two. So this is the way it works, guys. So when the stop loss now is above your break-even point, right? So now you can't lose. If it does retrace and goes backwards, right? You can't lose. And sometimes scalp trades, guys, it takes like it goes really quick. So if you're not efficient with that, you might get stopped out for a loss. All right. All right, guys. Any other questions? All right, guys. I will post the video in about half hour. All right. All right. All right, everyone.